Thank you so much for sticking around and joining me today. My name is Primo. I am the founder and the president of Specialist Trading, a very prominent educational site on the web. Now, for those of you who aren't familiar with Specialist Trading, what we do is we offer unique education courses in trading stocks, E-mini, and as you'll see today, the Forex market. Now, for those of you who also aren't familiar with myself, I've been speaking almost for a year now on FXB, but if you haven't attended any of my webinars, I've been trading now for just about 35 years. I first began my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jen Rett. I traded through the great bull market, the crash of '87, and then I left the floor in the mid-'90s to continue to trade capital, other people's accounts, trade my own account, and pretty much to explore all the different markets at that time. Now, I was the director of education for a number of sites, but about 3 years ago, this is when I formulated Specialist Trading, which basically just teaches everything, all the insights, wisdom, and trading strategies you see here from the floor. And these are the strategies and techniques that I continue to use for my own trading. So I'm basically sharing with you the secrets and the things that I learned while I was on the floor of the exchange. Now, I know a lot of people always ask me, especially new students, they'll say, well, Steve, your background is in stocks. How can you be teaching or trading the Forex markets with that information? Well, it's my opinion that the Forex markets are the absolute best trending markets around today. The best trending markets you'll find either in intraday trading or in the daily or even weekly trading. And most of my strategies and techniques are made for trend trading, so they transfer over tremendously onto the Forex markets, better than other markets actually. So that's why a lot of the things that I teach and trade myself personally work very well in the Forex market. So that brings us to today's presentation. What we're going to be talking about today is a simple way to trade with the trend. I'm going to show you a simple indicator that will help you decide which way the trend is currently moving, and then I'll show you some entry techniques that are the foundation of one of our best strategies. So that's what we're going to be learning today. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you performance results using this simple technique, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer, a few other announcements. I would appreciate it if you waited till the end of the class to ask any questions. I know a lot of presenters and educators like to take questions while the presentation is currently moving. I'm kind of the opposite. I want to wait till the end. That way we can, make the presentation flow a lot smoother and easier. And many times, if you wait for the next slide, your question is answered. So please, I promise I'll get to all of your questions, but please just wait till the very end. Write down a question if you happen to have it. If we happen to run out of time, I don't think we will, but if we do run out of time, I'll give you an email address as well as a phone number where you can contact us and you can ask any questions you have, okay? So please wait for that. Now, also I'd like to mention that, I state this a lot of times before I speak because I know that people come to these presentations, to webinars and to seminars, basically to get information, and mostly because they're having a difficult time. They've been going through a series of losses, and they're trying to struggle to find their way in trading or investing in the Forex markets. And I know exactly how you feel. I've said this many times. I started out the same way. Even when I was a specialist, I went through years of really tough times. I was, having 2 or 3 great months followed by disastrous months. And I just couldn't, get going. I was pretty much just breaking even, trading water for 2 or 3 years. And it was very discouraging. And so I know exactly how a lot of you feel because I felt the same way. And I really thought for a while that maybe this wasn't the right career for me because I really couldn't get anything going. Well, it wasn't until I met a few elite traders on the floor that really that changed my way of thinking through their way of trading. And they explained to me what their edge was. And I know it's a little bit different from what you've maybe heard in other presentations or webinars, but their edge is based in simplicity. Now, for those of you who are members of my site or have come to my webinars, you see how simple everything it is that I teach. I really discard all of the things that, for some reason, most of us have been taught that lead us on the path to success. And those are things such as chat rooms, listening to news, having just too many indicators to follow. We really strip away those things and keep things as simple as possible. And now, if you go to any presentations or read any books or go to webinars of people who have been trading as long as I have, 25, 30, 35 years, most of them say the same thing as I do. They say that the key to success is in keeping things simple. You know, the traders who have been around this long are not talking about these tremendous systems or algorithms or how you got to read the news. They're really saying you just follow a few simple rules, and that's how you get on the road to consistency. Because really what it's all about is consistency. It's not about home runs. I know a lot of traders will tell you, you know, you're going to hit home runs with this one strategy I have. And I know there are a lot of strategies that will produce tremendous, tremendous gains. But really, from trading as long as I have, it really doesn't mean anything. I've seen traders have made tremendous gains, millions of dollars in less than a year, and they've lost it all. So it doesn't matter how much you make. It matters how consistent you are. Because if you're consistent, you'll be able to trade 20, 30, 40 years down the road. And that really is the key to success. So this was the edge that my mentors taught me when I was struggling, when I was going through maybe what a lot of you are going through yourself. And this is what my goal is. I really want to teach you how to trade with the same specialist edge, which is really rooted in simplicity. Most of the things that you're used to using, we strip away at specialist trading and keep as simple as possible. Okay? So that's the philosophy behind my website. Here's what you're going to learn today. I'm going to give you two edges. The first edge is a proprietary indicator. You can probably find this on virtually any charting software package. If you don't, you send us an email. We'll tell you how to find it on the internet. It's free in a lot of places. But it's a great tool for discerning which way the trend is currently moving. And then I'm going to give you two entry techniques. Once you've found the trend, well, how do you enter? I'm going to show you two simple but very powerful entry techniques. All right? Then I'm going to show you numerous chart examples of how well this works. Now, first of all, I want to state off, when I'm explaining the concept behind this technique, I'm going to show you older charts. You know, I personally go to webinars myself, and it really bothers me when the educators show charts that are 2, 3 years old. Well, I'm going to show you older charts just to show you how the concept works. But then once we understand it, I'm going to show you current charts, as current as just about a couple of hours ago. I'm going to show you how well this works, how you could have had a really nice trade using what I'm going to be teaching you today. And then, as I stated earlier, we're going to have a question and answer period. So don't worry, just wait till the end to ask any questions. I'll go over each and every one of them, okay? Now, I also want to let you know that FX Street has built a microsite for us. So if you have any questions concerning purchasing this strategy or anything about my website, please, all you have to do is go to this link. In fact, we've shortened it down for you, we've abbreviated it for you so that if you're interested in finding out more information about specialist trading, rather than ask questions in the presentation, you can simply go to this microsite. Copy down this abbreviated link right here. It will take you to the FX Street educational page. And here we have information on my self-study strategies, how you can purchase the course, a little bit more information on myself. And if you click on course description, it'll take you to a page which describes and goes into detail all of my courses. Okay? So that's how you can find out about any of my courses for sale or anything about becoming a member of Specialist Trading. All right, let's begin. Now, this is an older chart here of the Australian dollar. But as you can see, looking back on this is a daily bar chart. We had a really nice uptrend. Okay, this is a very nice uptrend in place. And looking back in hindsight, most people go, well, Steve, yeah, you know, it's easy to see that we were in an uptrend because, you know, looking back in hindsight, it's very simple. But how could we have taken advantage while that was actually in an uptrend? You know, how could we have purchased at these really opportune levels we see here circled in green? These are the best places to purchase in this uptrend, okay? Well, here's where this technique really helps. It's going to help you find the trend, and it's also going to help you enter at these most opportune times when a trend is in place. We're going to first talk about the first edge, which is our proprietary indicator, which are the Donchian channels. As I said, these are a very prominent tool. They're virtually on any charting software package. You can find them, you know, all over the internet. I'm sure if you do a Google search, you'll be able to see them free. But they're a tremendous, tremendous tool, and this is the basis for this particular edge here, the Donchian channels. And what they are is, they're basically three channels that will help us discern the trend and find the correct zones for entry. Now let's look at uptrends. All right, let's say we're interested in, you know, purchasing some cross-currency pair that is in an uptrend or that we discern is in an uptrend. Well, how will we use it? Well, without the bar charts in place, this is the Donchian channel. This is the way you want to see the Donchian channels look. You see there are going to be three channels: an upper, a mid-level, and a lower channel. And what we want to see is all three of these channels headed in the same stair-step upward direction. Now, when I say stair-step, You see they're all kind of going up, then they go flat, sideways, then up higher. It's kind of a stair-step approach. And remember, they're not all in sync. As you can see here, we went higher, sideways, higher, flatted up. But at the same time, the bottom one was going sideways. As long as they're all heading from a lower level, that means they're all in sync, heading upwards, as you can see. So this is what we're looking for. We're looking for this stair-step upward approach in the Donchian channel. All right? So that's what will tell us that we are in an uptrend. All right, so let's go back. And as we can see here, at the beginning of this Donchian channel, where are we going to buy? Well, we want to see price rally, and then we want to see price sell off to the midline. This is our buy zone, okay? So anywhere around this midline, once we have rallied and then pulled back a little bit, once we get to the midline, with all three lines rising, this is our buy zone. And then as price rallies again, once we see it sell off and come down to the buy zone, the midline, we'll purchase some more. And then so on. Price rallies, comes back to the buy zone or the midline. It's that simple. Once again, we're not listening to any news. We're not going in any chat rooms and seeing what some Forex guru is telling us what to do. We're simply doing the easiest thing there is to do, and that's listening to the market. The market is telling us everything we need to know. There's no reason to spend hours time trying to discern things or trying to spend our hard-earned money on other programs that we think have the answer. The answer is really right in front of you. So let's look back at that old chart, the Australian chart. Remember we said, well, Steve, sure, it's easy to find that this is in an uptrend after the fact. Well, if we add the Donchian channels, remember, these are the places that are the most opportune to enter. But once we add the Donchian channels, what do we find? We see that price came back to the midline, and this was the buy zone. We rallied, came back to the buy zone again, and you see how the Donchian channels helped us find that buy zone each and every time. All the while, they were all in sync, rising at the same time, telling us that we're still in an uptrend. All right, how about trading downtrends? Well, it's very similar. In fact, it's the same thing. We just reverse the rules. We turn everything upside down. Here are the Donchian channels in a downtrend. Remember, we want to see three channels, top, mid, and bottom, and all three should be going in the same stair-step downward direction. They should be in sync. Okay? This assures us that we're in some type of short-term downtrend. Now, what we want to see is price sell off since we're in a downtrend, and then we want to see it bounce. Once it comes and bounces and touches the midline, that's a sell zone. Now, we're not saying this is where you automatically sell right now. We're just telling you that this is the zone where you start looking for selling opportunities. And then if price sells off again in the downtrend, once it rallies, it'll rally back up to the sell zone, and then so forth. This simple. All right, so let's look at an older chart of the Swiss franc. This is a daily chart once again. We'll look at different time frames later on in the presentation. It's clear to see in hindsight that this was a great downtrend. This was the currency pair was in a nice downtrend. But how could we have taken advantage of this? As I said, so many of my beginning students, especially, will say, Steve, yeah, I can see it's in a downtrend 2 or 3 months later, but how did I know while it was happening? Well, we want to take advantage, first of all, of these high opportune places to go short. How could we have done that in a downtrend? We simply add the Donchian channels. As we can see, all Donchian channels are headed in the same stair-step lower direction. Each time they bounce, anytime we came up to this midline, we were in some type of sell zone. Okay? So we've identified, or we've found out how to identify a short-term trend in play, and we've identified where the zones are, either to buy in an uptrend or where to sell in a downtrend. But we have to fine-tune. We can't just say, well, we're in the zone here, I guess we'll just short or we'll buy anywhere. As traders, we have to fine-tune our entries. So this brings us to the second edge. These are our 2 entry techniques. Okay? Your edge number 2. Now we have 2 specific entries, one for aggressive traders and one for conservative traders. Now, aggressive traders, when we say aggressive, we just mean that you're taking on possibly a little bit more risk because you're pretty much saying that you think it will not go any higher if you're shorting or it will not go any lower if you're buying. And you have to give yourself enough room to know that you may have a little, drawdown in place before it goes back in your direction. So this is an aggressive technique. Remember, if you're going to use this technique, first of all, I would advise everyone to paper trade all of this information I'm going to be giving you, just so you become accustomed to it and become familiar, and you can email us with questions later on if you really are more, interested in purchasing the entire course. But while you're doing this with the information I'm giving you today, please just paper trade it so you understand the process. But if you're going to aggressive trade this particular method, the entry is you're going to buy or sell when price touches that midline, that mid-Donchian channel, okay? So you can basically place a limit right there. Or if you're in front of your computer, just day trading, you can simply just wait for it to touch, and you can watch and kind of, have a little discretionary entry. You can either go at the market or just kind of wait and see how it acts once it touches the midline. But that's the aggressive entry, right around the midline. Let me show you what I mean here. Here's a daily chart of the dollar-yen. As we can see, we're totally in an uptrend. All the three Donchian channels are headed upwards. And as price rallied, it began to sell off. And once it touched that midline, you could have purchased it. And look what happened. It was off to the races, back up again. Now, this whole time, you could have stayed in the trade if you wanted to, or used the proprietary exit. But then look what happened again. We sell off. And right here, once again, we touch the midline. And it goes back up, okay? How about on the short side? Well, here's an aggressive entry for selling short. Here's a chart, a daily chart of the Swiss franc. Remember, these are older charts, but they're just for illustrative purposes, just to show you how this technique works. We're clearly in a downtrend because we've plotted the Donchian channels. They're all headed in the same stair-step lower direction. So this tells you, since they're all going south, we're only going to sell. We don't need to listen to any report. We don't need to be in any trading room telling us what direction it is. It's right here in front of us. Save your time, save your money. Just listen to what the market's telling you. Remember I told you, guys who have been trading for 20, 30 years down the road say the same thing. Trading should be kept as simple as possible. And it doesn't get any simpler than this. We know the trend, and we're simply waiting for a little bounce. Once we touch this mid-level, that's where opportunity place where we can go short. We go back down, we bounce back up again, we go short. We bounce back up again. Now, this is why we call this an aggressive entry, because look what happened here. Now, these other two times, the minute you shorted it, it pretty much went in your direction for a nice 100 or 200 pip gain. But right here, had you shorted it, you would have given up maybe 150, 200 pips in the opposite direction before it started to go your way. That's why this technique is only for aggressive traders, traders that have enough income and are willing to take on that risk. Because you may have to sit through 100, 200 pips of it going against you before the trend kicks back in. So this is why we say paper trade this. This is very risky. The aggressive method is very risky at first. But then once it got back in swing in the correct direction, look what happened. It came back up, and then the trend resumed lower. Remember, the Donchian channels are pretty much giving you a high probability of telling you which direction it's going. Once again, there's no need to listen or discern from anything else. The Donchian channels pretty much give you all that information. And you have an aggressive technique here now for entering based off of that indicator. All right, now let's talk about a conservative entry. This is the way I would probably tell most students to trade. My beginning students, I always advise start off with a conservative entry. Why? Because your risk is much less, and also many times the conservative entry will be the high of the bar when you're going short or the low when you're going long. So it's a great technique for cutting your risk down. The only problem is many times you won't have as many trades as the aggressive entry, but that's okay. It's all about consistency rather than trying to hit home runs. Remember, we're looking for consistency. We're not looking to make $1 million in the first year. All right, so here's the conservative entry. We are either going to buy or sell when a price bar is completely below or above the Mid-Donchian channel. Okay, you may want to write that down. When a price bar is completely either below or above the Mid-Donchian channel. So in other words, if we're buying, if all three Donchian channels are headed upwards, we're not going to buy once it sells off and touches the midline. We want to wait to see a bar, a price bar, whose high does not touch the midline. It's completely below. The bar is completely below. If we're going short, it's just the opposite. All three Donchian channels will be headed lower. We want to see a little bounce or rally where there's a price bar that is completely above the midline, not touching the midline at all. And at the same time, 3 Donchian channels are headed lower. I know this seems a little wordy. Don't worry, I'm going to show you a lot of examples where it'll make sense. Okay, here's a daily chart of the euro-dollar. Once again, this is an older chart for illustrative purposes. We have all 3 channels headed in the same upward direction. Now, at this point right here, one of the channels was out of sync. It was going lower, but that's okay. When we entered right here on this conservative entry, all 3 were headed in the same upward direction. So that's all we're concerned with. Now, if we were entering aggressively, we would have purchased right here. But this is a conservative technique. We're waiting to see a bar or bars, multiple bars, that are completely below the midline. So here's the midline right here. All 3 bars are rising. And here are 2 bars that are completely below. Okay? So these are our conservative entries. You could have entered on either one of these 2 bars. And you see how you really cut your risk down because it's being more conservative and the uptrend continues. Now we sold off. This would have been an aggressive entry. That would have been very nice. Once again, you're going to see more aggressive entries than conservative entries. But as a conservative trader, you just want to take those high probability trades. So we wait for a bar to be completely below the midline as it's rising. And that's this bar in green right here. As you can see, we went up right after that. Australian dollar, daily chart here. We are in a clear downtrend. All the 3 Donchian channels are headed lower. We have a bounce, and we have a series of 4 bars, daily bars, that are above the midline and are not touching it. They're completely above. So these are our 4. You could have taken shorts on any one of these 4 bars and had a very nice trade going short. And then once again, when it rallied, all 3 Donchian channels are still headed lower. Here was our conservative bar entry. You could have had another chance to enter conservatively right here. And then the trade started heading lower. Once again, this is all based on the roots of simplicity, right? You see how consistent this is. But I'm not going to sit here and tell you that every trade's a winner. I'm showing you trades just so that you can understand the concept. There are trades that don't work out right. That's why we use our proprietary methods of money management and stop placement to help you get through those. But there is a level of consistency to using this really simple trading method. All right, so we looked at older charts just so you could understand the concept and the process of how it works, how you buy in an uptrend and how you sell in a downtrend, how to enter aggressively, how to enter conservatively, just off using these 2 simple edges, 2 simple techniques, all right? Now, those were older charts. Once again, it really irks me when I go to presentations or I go to seminars and I see a guy using a year-old chart because he's basically finding things that worked, 6 months or a year ago. So I want to show you some current entry examples in different time frames. So let's look at some daily bars first. This is a daily chart of the Swiss franc going back to December up until January, up to the end of January. Now, the Swiss franc, as you can see, we're not listening to any news. We're not seeing what any commentators are saying. We're just plotting the Donchian channels. And the Donchian channels are all headed in the same stair-step direction. So it tells us all we need to know, that we're in an uptrend. Okay? So we're in an uptrend. That means all I'm going to be doing is looking for entries to buy the Swiss franc. That's it. There's nothing else you need to know. There's no algorithm. There's no system. There's no financial educational reports you need to know about. It's telling you everything in the price. So now we wait for price to sell off. Once price sold off to the midline, guess what? Here's an aggressive entry, and in the next couple of weeks, it rose 250 pips. When it sold off again, well, all 3 Donchian channels are still headed stair-step upwards. Could have purchased again aggressive entry, and in the following 2 weeks, another 150 pip rise. And then just last month, about a month ago, there was a sell-off. You could have had another aggressive entry and another 100 pips. Okay? This was just in the last 2 or 3 months, just looking at the dollar Swiss franc. Now, let's look at the euro dollar. Same time frame, from December to January, basically. Where are all the 3 Donchian channels headed? They're headed lower. They're all in a stair-step, in-sync, lower direction. So there's no reason to listen to any news. There's no reason to be in any chat rooms. The euro dollar is telling us it's going lower for trading the daily chart. That's all I need to know that I'm going to be looking to go short. All right. So where do we go short? Well, we have an aggressive entry right here. We could have sold, and in the following 2 weeks, there's a nice 500 pip move to the downside. All right. First week of 2012, we rallied again. We could have sold there aggressively, and there's a quick 350 pip sell-off. And then just about 2 or 3 weeks ago, we rallied up once again. You could have sold and made a quick 150 pips roughly with that. Okay? Everything you need to know is in the chart in front of you. Remember, keep things as simple as possible. Go to presentations of guys who have been trading 30, 40 years. They'll say the same thing. They don't have all these really fantastically, complicated ways of trading. They're basically, they follow 2 or 3 rules at the most. That's why they've been trading that long. Okay? Australian dollar. This is basically from the beginning of the year to roughly today. Okay? Or yesterday. I should say, yesterday, including what the action was. Now we have all 3 channels headed upwards, stair step. So this means you should only be looking to buy the Australian dollar. We have a sell-off right to the midline. You could have bought right on the low, and for the first month of the year, you could have had a nice 500 pip gain. All right. Now coming into February, we've had a number of places to buy, and in fact, as late as yesterday or the 20th, it was still flashing buy signals. So these are aggressive entries. Remember, once again, aggressive entries. So many times you may have to sit through a drawdown with an aggressive entry. Because as we know, the Australian dollar right now really isn't rallying that much, or last I saw before I started this presentation. Please remember, I know some people are asking questions. Remember, wait till the end. I'm not going to answer any questions for the last portion of the presentation. So with these aggressive entries, this is where you have to have more capital to take on that risk, because you may have to sit through some type of a drawdown of anywhere from 100 to possibly even 200-300 pips. So this is things why I always say paper trade first so you can understand the process and see what best fits your trading stuff. Okay? So as of right now, if you're an aggressive trader in the Australian dollar, you would actually be long or going long right now. Okay? Let's look at some more charts. Here's the euro yen. All right? Once again, from December up until January, where are all 3 Donchian channels headed? They're all headed lower. Okay? We have a nice bounce at the beginning of December. You could have had an aggressive entry to go short, or you could have taken this conservative entry to go short in the euro yen, and in the next month or two, 650 pips in the continued direction that you wanted to go. Extremely, it doesn't get any easier than this. This is in the last 2 months. All right, now different time frames. Let's say I know a lot of you will say, well, Steve, I don't have the capital or the time to be trading, holding overnight positions. You know, I'm more of a day trader, or I mean, some of you may say, well, Steve, I'm more an investor. I like the long term. You know, this is great on daily charts, but what about me? I'm an intraday trader. Okay, well, let's look at some different time frames. Here's a 5-minute chart of the euro yen. This was on the 14th. Okay, this was just last week. Okay, where are all 3 Donchian channels headed? They're all headed upwards. So right off the bat, we don't care what anyone is saying. We don't care what any other indicator or any other chat room is saying. We just know that we want to go long the euro yen. Now right here, the euro yen indicator, Donchian channel went down, but that's okay because we had already entered either on this aggressive entry or on this conservative entry of these 3 bars right here. And you would have been in the trade, and had you held on long enough, you could have made a quick 40 pips in like an hour or so. Okay? It's a 5-minute chart. Now, I don't personally recommend trading a 5-minute chart, but I know some of my students like to trade intraday at that small time frame. So I just want to show you the consistency of this method, how it can really be easily transferred into any direction, any time frame. This was last week in the euro yen on a 5-minute time frame. All right, how about a 60-minute chart of the British pound? This was last week as well, on the 14th. All 3 Donchian channels are headed lower on an hourly chart. So this is telling us on an hourly chart, we're only going to be looking to go short the British pound. We're not looking to pick a bottom. We're not looking for any type of bottom fishing. We're trying to be in sync with the trend. Remember I told you how well these markets trend in the beginning of the presentation? That's what we're trying to do. We're trying to find the trend and just simply jump on board. We're not trying to use our ego and say, it's topping out right here, or all my indicators and all my analysis say that it should go no higher, or there's support or resistance. We don't care about that. There's too much discretion involved. There's too much judgment. We just simply listen to what the market's telling us, and on this hourly time frame, the British pound was saying, listen guys, I'm heading lower. So if you want to jump on board, you should short me. So had you sold an aggressive or even a conservative trade right here, you would have made a quick 100 pips in 4 or 5 hours. All right, let's look at on the 12th of February, a little over a week ago, on the Australian dollar at 30-minute time frame, okay? All the indicator channels are all headed upwards, so we're only looking to buy. We're not concerned with anything else other than what the indicator is telling us. And we have this really nice conservative entry right down here. If we miss that, there's another aggressive entry right here when we touch the midline, and another aggressive entry right here. So all the while we were in an uptrend, we could have been holding on to this. And in the 30-minute chart, had you purchased at this point right here, there was a nice 90 pips you could have made very simply and easily. The minute you got into it, you pretty much would not have had any risk associated with the trade at all, because you were in sync with the direction of the trend. Much easier to jump on board or to swim downstream with the current at your back than it is to swim upstream. But so many traders, for some reason, have been taught, or we believe that we always try to pick a top and pick a bottom, basically stand in front of a speeding train. And I know personally, because that's the way I traded. When I was first a specialist on the floor, I traded that way. All I tried to do was pick tops and bottoms. I had a ton of indicators. I was subscribing to every newsletter there were. There weren't any chat rooms or trading rooms then. There was no internet. But I subscribed to all these newsletters. I was always looking for all these financial reports to come out to discern what the news meant. And I would have these great months where I picked the top or bottom. And then the first time it didn't work, I'd give everything back. So you see, that's really not the pattern of a consistent trader. You know, anyone can try and pick a top or bottom and win every once in a while. What we're looking for is consistency. Okay? And this is where this method really helps. All right, let's say you're an investor. Well, this method can easily transfer over into monthly charts. All right, let's say you really want to hold for the long term. Now, the dollar-yen has been in a terrible downtrend since '08, all the way to the beginning of this year. Okay, as you can see. Look what happened. Every time we bounced on these monthly charts, there were aggressive entry points. Bounced again, aggressive entry point. Bounced again, an aggressive entry point, and another one. 4 specific aggressive entries to go short. Remember, once again, you could have listened to every commentator. You could have tried to discern all the news that came out of Europe or whatever, what's going on. You didn't have to. This is all right here in front of you. And if you'd taken the first signal, you would have had a nice 3,000 pips in about 2 or 3 years. Okay, just holding on as investors. Let's look at a 4-hour chart of the euro dollar. Okay, this was on the 23rd of January, about a month ago. And we have a real nice set here of conservative entry. Okay. Now the direction is easy to spot because why? We have all 3 Donchian channels headed in the same upward. That tells us we're in an uptrend. So that tells us if we're in an uptrend, we're only looking to buy. We will never short in an uptrend, and we will never buy in a downtrend. Remember, we're always in sync with the trend. Here's a weekly chart of the euro dollar, okay, going back to August of last year into this year. As you can see here, all 3 Donchian channels are headed lower. So this tells us we're only going to be looking to short the euro. Okay, you could have known that since August of this past year. Here's an aggressive sell. And this is why we say it's aggressive, because you had to kind of sit around and wait for a good month or 2 before the trend kicked in. But had you used this conservative entry, you would have entered pretty much towards the top, and then the trend would have continued. Here's an aggressive entry on the weekly chart. This is why we say aggressive once again, because look what happened. It didn't go in your direction right off the bat. But the Donchian channels were still headed lower, telling you that the direction is still down. So had you had enough money in your account to take the trade, you would have held on, and ultimately about 3 weeks later, you see the trend really resuming in your favor. And guess what? Look what happened in the middle of February here. We're right back up to an aggressive sell in the euro. Now, once again, we are not dishing out signals for you to take. These are just suggestions, just to watch. You can watch along and see if this works on your own. But remember, we always advise everyone to paper trade. But right now, if you're looking at this method, this simple method, it's telling you that on a weekly chart time frame, the euro dollar is flashing an aggressive sell signal. Okay? All right. Now, you talk about current. Let's look at something that happened 2 hours ago. I snapped this slide when the other presenter was speaking. I was looking through some of our trades, and this happened actually just a few hours ago, so I took a quick snapshot of it. This was in the British pound on an hourly chart, okay? So the chart didn't go back enough, but all 3 lines are headed lower, okay? I wanted to make sure you saw this, and you can see this is from the 21st. So since all 3 Donchians are headed lower, it's telling us that we're in a clear downtrend. So we're only going to be looking to go short the British pound on an hour. hourly time frame. I realized if we went to a 5-minute time frame, it could be a different direction. But all we take into consideration is the current time frame we're looking at. I know a lot of traders like to use higher time frames to discern the lower one, and I know I always get that question. Personally, I don't find any consistency in that. I know a lot of traders swear by that method. I've never seen anything to consistently validate that. So I only look at the current chart I'm looking at. If the 60-minute time frame has all three Donchian channels headed lower, then that's the only thing I'm concerned about. That the direction on the 60-minute time frame is low. So you had a nice aggressive entry here. You could have gone short, a number of aggressive entries. And this is once again why we say aggressive, because you would have had to hold on for a long time until the trend finally went into your direction. But you had an even better conservative entry right here. Okay? And once you could have shorted here, there wasn't really much drawdown to that entry. And there was a nice 70 pip trade there. I don't really know from the last hour or so what the British pound has done, but using our proprietary money management and exit techniques, this could have turned into a really nice trade. I'm sure you would not have lost anything on this trade. But this is showing you the resiliency of this simple method and how easily it transfers over into any direction and in any time frame. Okay? I've showed you, charts that are going back a year or so, but I've also showed you a chart that's 2 hours old, plus charts that are daily charts at different time frames that are roughly about a week old. Okay? So this is why I say experiment with this. I don't want you to just put down your hard-earned money and take everything I say for granted. Like I said, I'll be the first one to say that it doesn't work all the time, but it has tremendous consistency to this because of its simplicity. So let's recap. What did you learn today? I gave you 2 edges. The first edge was our proprietary indicator, the Donchian channels, and how to properly use it. Remember, we're looking for it to define trends, and if all 3 channels are headed in the same upward direction, that's an uptrend, and that means we're only looking to buy. We'll never go against the trend. If all 3 channels are headed lower, we're looking to sell. We'll never go against the trend and try to buy it. We'll only look to go short. Secondly, I gave you 2 entry techniques. Using the same indicator, remember we're keeping things very simple, the same indicator gives you clues on where to enter. You have an aggressive entry where it meets the midline, or you have a more conservative entry where the bars are completely above if you're selling or completely below if you're buying. Okay? Then I gave you numerous chart examples. Remember I stated at the beginning, my trading suffered for years. I know exactly how many of you feel. I felt the exact same way. You feel like you're never going to find it. You're treading water, or you'll never get the key. How come everyone else is doing well and you're not doing well at all? I know exactly what that feels like until I found that the real key is simplicity. That's really what it's about. All of these signals here generated were done without the aid of being involved in any chat rooms, without having to worry about what was being, in some economic news report. Didn't worry about that. Everything you need to know is right in front of you. I know a lot of you have questions. Frequently asked questions about this, especially my beginning students. What about stop placement? Where do I place my stop? Or where do I get out of the exit? What about time frames? You showed a number of time frames. Are some better than the others? How do you increase your success rate? Are there different ways to increase your success rate? And especially, what are the correct Donchian settings? Well, all of these questions are answered from members. I'm sorry, I can't give away all this information because this is what you get in the course. Now, it wouldn't be fair to me for the people who purchased the course and give away all of the rules. But in the course, I do teach you about multiple stop placements, multiple exit points, both aggressive and conservative. I teach you which time frames this works best on, how to increase the success rate, and we tell you the proper settings. Believe it or not, there are different settings for different types of volatility in the market. So, take a few seconds just to show you, if you're interested, we have a special deal for the FX Street audience today. This is our Trend Trader course. It's strategy number 1. Now, if you decide to purchase the course, you get all the information I just talked about, 5 videos. I go into detail about the entries, about the exits, and the stops. Along with this, you get weekly and archived lessons. Each week, I have a video lesson where I tell you how to increase your chances for success. As well, we have archived videos, dozens of archived videos that you can help to teach you to learn this as well. You also get 1-year trade signal alert, where it's automatically displayed on your chart. If you are a NinjaTrader user, you get 1-year trade signal alert. We give you PDFs of the rules, and lastly, my personal email address. So during the day, if you have a question, if you're not sure whether this is a correct signal or not, you can email me, and I'll get right back to you as soon as possible. Now, this course usually runs for $4.95 for FX Street listeners today. We're dropping it down to $3.95, but that's for a limited time only. And you see, through the last week or so, you could have purchased dozens of this course for that small of a price with all the trades you could have taken that were winners. So this is an extremely great deal. Once again, it's just for a limited time only, a few days. So if you're interested, remember, you can go to the microsite that FS Street has so graciously prepared for us. This is the link that if you want to copy the whole one, we've abbreviated it down to this short link right here. So this will give you all the information. If you have questions about this course or any of the other courses I have, simply copy down this short link that we provided for you, and that will take you once again to the FX Street microsite. Gives you all the information. Remember, once again, should you have any questions concerning what I went over today, if we happen to run out of time, or I know a lot of students will come up with a question once we end the presentation, you can always email us. Our VP of Trading of Global Trading Sales is James now. You can reach him at jamesp@specialisttrading.com. He's brand new with Specialist Trading, and he's the VP of Global Sales. You can contact him directly if you want to speak to him over the phone at 310-295-1626. If you have any questions, say you have a question about what I went over today and the presentation concludes, you can always contact us this way. Okay? All right. Let me see if I can get to some of these questions here. Steve, does it matter whether the market is trending or ranging? Well, Carly, yes, it does matter that the market is trending. For this specific technique, this is our trend trader strategy. So we want to see that we're in a clear uptrend or in a clear downtrend. And that's what's so great about the Donchian channel. If we're just kind of going sideways, all three of those channels will not be in sync. So it will keep you out of trouble many times. And I'm not going to guarantee that, it's not going to have profitable trades, but what I'm trying to say is it will keep you out of a lot of that noise that happens so many times when it's just a quiet market. So we want to see that we are in a trend, and this is what the Donchian channels do for us. They're a great tool for finding the trend. Okay. Next question. Do you provide signals on end of day, and do you send it by email? Okay. This is Naive Trader. What we do is, if you are a NinjaTrader user, the NinjaTrader users automatically get an add-on which produces the signals automatically. So you have that right there for you. We do not give you issues on signals because there are too many time frames. All the time. But we do, once again, you can always email me and ask me if there is a particular signal in place, and I can get back to you as soon as possible, if you're a member. Okay? So there's lots of ways to find out. I can personally tell you if there's a signal or not. Okay? George asks, are there DCs for MT4? I'm not familiar with MT4 that much. I don't know if they have it. I would probably suggest calling them up. I know a lot of other charting software packages. People have asked us before. They've had other packages where they actually do not provide them, but then once they've contacted their tech support, the tech support has provided them with the indicator. So you may be able to do that with MT4. If they don't have it readily available, they may be able to provide it for you. I'm sure if you do a Google search, there are lots of ways to find Donchian channels for free on some of these free sites where they have charting for you, and you can use it there. But it's a great, great tool. I know that NinjaTrader and TradeStation do provide it right off the bat. I'm not sure about MT4. Okay, any other questions? Someone says, sorry I was late. Which is the setup for the Donchian channel? Well, once again, Jutta, I can't give out that information because it wouldn't be fair for the people that purchased it. This is a great strategy. As you can see, they are, these are current examples that I showed you, anywhere from a week to a couple of hours old. And it shows you how well this works, okay? Now, once again, this is not 100% foolproof. There are going to be some losing trades, okay? So right off the bat, I'm going to tell you they're losing trades. But once you become a member, if you learn our money management techniques as well as our ways in which to increase your rates for success and conservative trading as opposed to aggressive trading, you'll really achieve that level of consistency. I started out the program by saying we're not here to show and tell you that you're going to be making tons and tons of 100% trades. What our goal is to give you the simplicity. So that's what our real goal is in specialist trading. Okay. What is your contact personnel? Right here. This is our contact personnel right here. James is now our new VP of Global Sales. He can answer any questions you have concerning what I went over today. James P. at specialisttrading.com. If you'd like to just speak to him, just go over some more things, you can contact him at 310-295-1623. And I see we have another Primo here. Okay, great. Louis Primo. That's great. I'm glad there's some more Primos around. So English is acting, so Brett is gone. No, Brett is not gone. Brett is more in a managerial position, and Brett is really overseeing the entire operation. So no, Brett, I have not lost Brett. We just added on a great person in James, and James is helping us out. Specialist trading, as I told you a lot, we had an end of the year presentation. We've expanded tremendously. We've really expanded our markets. We've had all these new strategies and tons of more members join in the last year. 2011 was a great year for us. So we've really expanded, so we've had to add more people such as James. James is highly qualified and knows a lot about the markets, trader himself, worked for other companies and knows all about trading the markets and strategies. He's with us now, and Brett is pretty much overseeing the entire project. So we're all still here, we just had to expand a little bit. Okay, Adrian says, do you dare to confirm that once we become member and using your method, we can gain profit back on money invested in this strategy? No, I'm not going to give you a money back guarantee because I know personally that there's no way you can guarantee that. In fact, I would be going against the rules of our disclaimer and everything. There's no way you can give any guarantee. But what I can guarantee you is you will get hand-by-hand references and information that I have taken 35 years to accumulate. I will give and share with you that you will learn within the first couple of weeks at Specialist Trading. Everything that's taken me 35 years to accumulate, all the experience, all the knowledge, all the setbacks, all the gains, is yours as a member of Specialist Trading. Any question you have concerning that is all yours. So I'm really, altering your bell curve for learning. So your learning curve will be, cut in half with all the information that I can share with you. I've seen everything. I've gone through systems, strategies, algorithms, and everything. And after years and years of trading, once I left the floor, I saw that the simplest things are the things that work. So that's what you'll get. I'll be there with you every step of the way as a member of Specialist Trading, okay? And I'll guarantee that I will give you all of my insights and all of my information, and you'll get it directly from me, okay? So that's what I can guarantee. Jano asks, Steve, do you have an audited track record of your own personal trading results given your vast experience? No, I do not, and I would not share that with anyone because, personally, I go in and out of trading. As I said, I trade all markets. I'll trade stock market. I'll trade the stocks, and I'll go and trade the E-minis, and I'll trade Forex for a while. But I trade all of these markets, but I go in and out. So there's no automated track record. What I can do is you can do a global search of me on Google and see my track record of what I've done and my history of how well I've taught at other courses and how long I've been trading. And, all I can say is I've showed you and given you things today. If you don't feel comfortable with it, there's no one forcing you to do anything, but try it out, paper trade it for a while. And if you feel comfortable with it and you say, boy, after a couple of weeks, this stuff is actually pretty good, then give us a call. And you'll see that we're not lying. We gave you a lot of free information here, all in good faith. So there's nothing you're risking right now. There's no pressure to do anything. We're just saying if you're convinced, we can help you right off the bat and you can start trading with the rules in a few seconds. You have immediate access, okay? Is this strategy as successful as strategy number 5 in FX Clue? Michael asked about strategy number 5. Strategy number 5 is our premier strategy, and I would say strategy number 5 is probably our best strategy for record to date because it pretty much just focuses on daily charts. Okay, so we have a really nice, roughly 2-year track record of that. With this particular strategy, this methodology, as I showed you, it trades in every time frame in every direction. So there's no real way to calculate. We would be, having a statistical nightmare trying to keep track of every time frame from tick charts to 5-minute charts to hourly charts to daily to weekly. It's just too difficult to do. We're an educational company. We're not a systematic number crunching company. So there's no way to tell. All I know is that I still use this method. It actually works well in stocks and the E-mini as well, but it works much better in the Forex market. So there's another advantage you get. You can also use this to trade in other markets should you decide to become a member. But this is a really, really great method, very simple as you can see. And once again, we're not trying to force or pressure anyone. Try it out. We get, I know I go to these webinars and a lot of people basically what they try to do is just to give their opinion or they sell their ideas. But most webinar instructors don't give you anything to use. All of my webinars, I always give something for my students or attendees to work with and to paper trade and to see if they like it. And most of the people come back to us weeks later saying, boy, I tried that for a couple of weeks. That's fantastic. Can I get all the rules? And then they become members. So this is what I'm sharing with you today. And once again, should you decide to become a member, I'm there with you every step of the way. You'll get all my years of education. And if things are really difficult, I'll just even phone call you and walk hand by hand through the trade. Okay? Carlos asked, Steve, do you provide info on where to set stop loss for all your strategies to members that purchase your system? Yes, Carlos. That's what I tried to explain earlier. That's what comes with the course. All the information. We have aggressive and conservative stops. We even tell you where to at a certain point where to move your stop to break even. We also tell you where the aggressive and conservative exits are. We tell you how to heighten your chances for success. All this is in the course, okay? This is all information that you get. It wouldn't be fair to give out that information in a free webinar for the people that did pay the full price, okay? Adrian, how much had you made using the strategies per month? Well, I vary back and forth. We have, I would say, probably close to 30 strategies, and I trade each and every one usually for a little bit and go in and out of them because I'm trading different markets. So it's difficult for me to say. Sometimes I'll be focusing more on the E-mini. So this is, once again, this is not an accounting brokerage firm. This is just an educational site. We teach you how to trade with this. So remember, we don't have numbers and figures. This is not a brokerage company, okay? I know there's a lot of trust that comes in with this, but I think you can tell through what I've shared with you today that all of our sharing is in good faith, that we're trying to educate you more than just sell you. I'm trying to really show you that the key to this is basically just keeping things simple. If you leave with one thing today, if you're not interested in anything I've taught you, just keep things simple. There's no reason I'm trying to persuade you to do anything, but keep things as basic as possible, and that's how really you'll achieve that consistency. Now, I see we're getting towards the end here. I really appreciate all of you attending. Remember, if you have any questions, please contact James. He's our VP of Global Sales, James P. at specialisttrading.com. You can contact him and call him, speak to him over the phone at 310-295-1626. Okay? Thank you so much for attending today. Remember to contact us. If you're using the techniques I gave you, just paper trade for a while. Don't spend your hard-earned money. Keep things as simple as possible, and then hopefully you'll be able to trade 30, 40, 50 years down the road. Thank you so much. See you next time. Bye-bye.